Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news that the China-US trade rivalry is ramping up to the point where it is serious for the world economy as impacts bite harder. The recent bond rout is intensifying with prices sharply higher and yields sharply lower as confidence about the future leaks away. This is essentially being driven by concerns the trade situation is being mismanaged badly. US Treasury rates are back to overall levels last seen in 2007, and the market is now pricing in 3 US Fed cuts. Wall Street is down another 1.1% so far today, and that means the fall in May is accumulating and now well above 5% so far, trimming the 2019 gains back to just on 10%. Overnight, European markets fell hard, down about 1.5%, and yesterday Shanghai was actually up 0.2%, but Hong Kong dropped 0.6%, and Tokyo dropped 1.2%. The Bank of Canada, which pushed through 3 hikes in 2018, held its policy rate overnight in its latest review, and it made no sign that it's about to resume those hikes. China is ramping up its threats to withhold rare earth minerals for export in retaliation for US moves in their trade war. These minerals are vital for the tech industry, and China is a dominant supplier. The US sources about 80% of its needs from China. But it isn't the only supplier. Australian sources will now get a shot in the arm. China has a debt problem, and it's getting worse. Their overall leverage ratio, which measures outstanding debt in the real economy against nominal GDP, increased to 249% at the end of March, the highest since this series started more than 25 years ago. And the growing trade wars have brought a sharp drop in air cargo growth in April, and the trend is clearly negative this year. International volumes were more than 5% lower than the same month in 2018 and down more than 8% in the Asia-Pacific region. Another problem is festering as well. Overnight, both the EU and the ECB separately challenged Italy over its inability to control its ballooning public debt levels and the contagion risk that poses for all of Europe. In Australia, everyone is expecting an RBA rate cut next week. Borrowers will be the beneficiaries, and banks are preparing to reset mortgage rates to fresh record lows. Savers will be on the short end, though. US Treasury 10-year yield is lower by another 2 basis points today, at now 2.24%. That's its lowest level since September 2017. And gold is up $3 to $1,281 an ounce. US oil prices are lower today, now just under $59 a barrel, while the Brent benchmark is just on $69 a barrel. The Kiwi dollar will start today down nearly half a cent at 65.1 US cents. On the cross rates we're also lower at 94.2 Aussie cents, and against the euro we're little changed at 58.5 euro cents. That puts the TWI down to 70.1 and about where it was at this time last week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.